Have you ever wondered why countries are so obsessed with gold? It's not just for making pretty jewelry. For centuries, gold has been the ultimate symbol of wealth and power. And right now, there's a massive gold rush happening. But not in the way you might think. Forget the old prospectors with their pans and pickaxes. The biggest player in this modern gold rush is a country, China. For the past couple of years, China's central bank has been on an unprecedented buying spree, quietly and consistently adding tons of gold to its vaults. This isn't just a random shopping trip. It's a calculated, strategic move with huge implications for the entire global economy, and yes, that includes your wallet. So why is China doing this? What does it mean for the US dollar's dominance? And what could it signal for the future of money as we know it? Stick around, because we're about to dig deep into China's great golden strategy and uncover what's really going on behind the scenes. To really get what's happening, we need to look at the numbers. As of early 2024, the People's Bank of China has been buying gold for 18 months straight. That's a year and a half of continuous accumulation. We're talking about hundreds of tons of gold being added to their official reserves. In 2022 and 2023, central banks around the world bought record amounts of gold, and China was leading the charge. This buying frenzy has pushed the total official gold reserves held by China to well over 2,200 tons. And here's the kicker. Many analysts believe the true number could be much, much higher. Why the secrecy? Well, a country's gold holdings are a matter of national economic security. China has been known to be very discreet about its acquisitions, sometimes going years without reporting any changes, only to suddenly reveal a massive increase. This suggests that the publicly declared figures might just be the tip of the iceberg. The real amount could be double or even triple what's officially stated. This quiet accumulation strategy makes their moves less disruptive to the market and keeps other global players guessing. So the big question is, why all the secrecy and why the sudden aggressive buying? The primary reason is de-dollarization. For decades, the US dollar has been the world's reserve currency. This means most international trade is done in dollars, and countries hold vast amounts of dollars in their foreign reserves. This gives the United States immense economic and political power. If a country falls out of favor with the US, it can be cut off from the dollar-based financial system, which is a devastating economic blow. We saw a prime example of this with the sanctions placed on Russia. Trillions of dollars in Russian foreign reserves were effectively frozen. This sent a shockwave through the international community. Countries, especially those with sometimes tense relationships with the West, like China, took notice. They realized that their reliance on the US dollar made them vulnerable. If it could happen to Russia, it could happen to them. This is where gold comes in. Gold is the ultimate neutral asset. It's a physical asset that isn't controlled by any single country or government. You can't freeze it with the push of a button. It has been a store of value for thousands of years. By converting their US dollar holdings into gold, China is essentially buying insurance. They are diversifying their reserves away from an asset controlled by a strategic rival and into an asset that is universally accepted and holds its value. It's a move to protect their wealth and gain more economic independence. Another key reason is to bolster their own currency, the yuan. China has ambitions for the yuan to play a much larger role in global trade and finance. For a currency to be trusted internationally, it needs to be seen as stable and backed by something of real value. Historically, that something was gold. The gold standard, where a currency's value was directly linked to gold, was the norm for a long time. While we're not going back to a strict gold standard, having massive gold reserves lends immense credibility to a currency. When the world sees that China has a mountain of gold backing the yuan, it increases confidence. It makes other countries more willing to hold yuan and use it for trade. We're already seeing this happen. China is actively promoting the use of the yuan in trade deals, particularly with partners in the BRICS bloc, Brazil, Russia, India, China, and South Africa, and along its Belt and Road Initiative. This petro-yuan is starting to challenge the petrodollar as oil-producing nations begin to accept yuan for their oil exports. Every ounce of gold China buys strengthens the yuan's case on the world stage. Now, let's talk about the ripple effects. What does all this mean for the rest of us? First, the demand from China and other central banks has been a major driver of the gold price. With such a huge and consistent buyer in the market, the price of gold has been climbing to record highs. This has been great for gold investors, but it also has broader economic implications. A rising gold price is often seen as a sign of economic uncertainty and a lack of faith in traditional currencies. It's like a global vote of no confidence in the current financial system. For the US dollar, the implications are profound. While the dollar isn't going to be replaced overnight, its dominance is clearly being challenged. As more countries follow China's lead and diversify away from the dollar, its value and influence will gradually erode. This could lead to a multipolar currency world, where the dollar, the euro, the yuan, and perhaps other currencies all share the stage. For the United States, this could mean higher borrowing costs and a reduced ability to fund its massive deficits. It would fundamentally change the balance of global economic power. And for the average person, while it might seem distant, these geopolitical shifts can have very real consequences. A weakening dollar could mean higher prices for imported goods and increased inflation. It could affect the value of your savings and investments. That's why so many individuals are also turning to gold, viewing it as a safe haven to protect their wealth from currency devaluation and economic instability. The same logic that applies to a central bank, diversifying and protecting assets, applies to individual investors as well. So, what's the end game here? It's unlikely that China wants to completely crash the US dollar. After all, they still hold a huge amount of US debt, and a sudden collapse would hurt them too. The more likely scenario is a controlled, gradual shift. China is playing the long game. They are building up their economic resilience, strengthening their currency, and positioning themselves for a new global financial order where they are not just a participant, but a rule maker. Their gold strategy is a masterclass in strategic foresight. They are preparing for a future where economic power is more distributed and not so heavily concentrated in the hands of one nation. They are using an ancient asset, gold, to build a modern financial fortress. This is one of the most important economic stories of our time, unfolding right before our eyes. China's golden ambitions are reshaping the world, and the final chapter has yet to be written. The world is watching every move, because where the gold goes, power often follows. What are your thoughts on this? Do you think China's strategy will succeed in challenging the dollar's dominance? Historically, gold has been the foundation of monetary systems, serving as a tangible store of value backing currencies. While the world moved away from the gold standard decades ago, gold still plays a crucial role in underpinning confidence in a nation's currency. By increasing its gold reserves, China strengthens the credibility and stability of its own currency, the yuan. This move signals China's intent to reduce reliance on the US dollar, which currently dominates global trade, finance, and reserve holdings. The dollar's dominance gives the US significant economic and geopolitical advantages, including the ability to finance deficits cheaply and impose sanctions. China's growing gold reserves are part of a broader strategy to internationalize the yuan and create a more multipolar currency system, challenging dollar hegemony. China's gold accumulation supports efforts to promote the yuan as a global reserve currency. Countries holding yuan-backed assets or trading in yuan gain an alternative to the dollar, reducing their exposure to U.S. monetary policy and geopolitical risks. Gold reserves provide the yuan with a tangible backing that can increase trust among international investors and central banks. As China's gold reserves grow, it sends a message to the world that the yuan is serious about becoming a stable and reliable currency. This challenges the dollar's hegemony and could lead to a gradual shift in global currency dynamics, where the yuan plays a larger role in international trade and finance. Global currency dynamics. The shift isn't just about China and the US. Other countries are watching closely and may diversify their reserves away from the dollar, especially amid geopolitical tensions. This diversification can weaken demand for the dollar and increase volatility in currency markets. China's gold holdings also influence global gold markets by increasing demand and potentially driving prices higher. Higher gold prices can further support alternative currencies backed by gold reserves, creating a feedback loop that challenges the dollar's supremacy. Implications for investors. For investors, these shifts mean that currency risk and geopolitical factors are becoming increasingly important in portfolio decisions. The potential rise of the yuan as a reserve currency backed by substantial gold reserves could reshape global investment flows and asset valuations. In summary, China's growing gold reserves are a strategic move to bolster the yuan, challenge the US dollar's dominance, and reshape global currency dynamics and evolution that investors must watch closely. China's recent revelation of significantly increased gold reserves has important implications for gold prices and the broader precious metals market. This move signals a strong strategic demand for gold that could influence prices for years to come. First, China's accumulation of gold adds substantial buying pressure to the market. When a major economy like China increases its gold holdings, it reduces the available supply for other buyers, pushing prices upward. This demand is not speculative, but strategic, meaning it's likely to be sustained over the long term, providing a solid foundation for higher gold prices. Second, the announcement boosts investor confidence in gold as a safe haven asset. In times of economic uncertainty, geopolitical tensions, or currency volatility, gold is often seen as a reliable store of value. China's move reinforces this perception, encouraging more investors worldwide to allocate funds to gold and other precious metals. The impact extends beyond gold to the broader precious metals market, including silver, platinum, and palladium. These metals often move in tandem with gold, benefiting from similar economic and geopolitical drivers. Increased interest in gold can lead to spillover demand for these metals, especially silver, which shares many of gold's monetary properties, but also has significant industrial uses. Additionally, China's gold strategy may accelerate the internationalization of the yuan, which could shift how precious metals are traded and priced globally. As China promotes gold-backed yuan transactions, it could create new markets and demand channels for precious metals. In summary, China AUS gold reserves reveal is a bullish signal for gold prices and the entire precious metals sector. It highlights growing strategic demand, strengthens gold's role as a safe haven, and could reshape global precious metals markets in the years ahead. China AUS aggressive gold accumulation is more than just a financial strategy. It is a clear signal of shifting global economic and geopolitical power. For decades, the US dollar and Western financial institutions have dominated the world stage, but China's growing gold reserves indicate a challenge to that status quo. Gold has long been a symbol of economic strength and sovereignty. By building one of the largest official gold reserves in the world, China is reinforcing its economic independence and reducing reliance on the US dollar. This move supports China's broader goal of promoting the yuan as a global reserve currency, which would diminish the dollar's dominance in international trade and finance. This shift has profound geopolitical implications. Control over gold reserves and currency influence translates into greater leverage in global affairs. China's strategy enhances its ability to negotiate trade deals, influence international institutions, and project power on the world stage. Moreover, China AUKUA's gold buildup reflects its ambition to lead the next phase of globalization, one that is less centered on Western powers and more multipolar. This challenges the existing economic order and could lead to new alliances, trade blocs, and financial systems. For other nations, China's gold strategy serves as a wake-up call. Many are reconsidering their own reserve compositions and economic policies to adapt to a changing world where the balance of power is shifting eastward. In essence, China's gold accumulation is not just about wealth, it's about reshaping global power dynamics. It signals a future where economic influence is more distributed, and China plays a central role in defining the rules of the global financial game. Have you ever wondered why China is buying gold like there's no tomorrow? It's not just about shiny jewelry. For 18 months straight, China's central bank has been on a massive gold buying spree, and it's sending ripples across the entire global financial system. What's really going on here? Let's break it down. Traditionally, countries hold a lot of their reserves in US dollars. The dollar has been the king of the financial world for decades, but things are starting to change. By stocking up on gold, China is diversifying its assets. Think of it like not putting all your eggs in one basket. If the value of the dollar fluctuates, having a solid stash of gold provides a safety net. Gold is a timeless asset, a physical store of value that isn't tied to any single country's economic policy. This move is also about increasing the global influence of China's own currency, the yuan. As China builds up its gold reserves, it adds credibility and stability to the yuan. The long-term goal? To position the yuan as a more attractive alternative to the US dollar for international trade and investment. This is a huge strategic play, a quiet but powerful challenge to the dollar's dominance. It's part of a broader trend called de-dollarization, where countries are slowly moving away from their reliance on the US dollar. So what does this mean for you and me? Well, this massive demand from China is one of the key reasons why gold prices have been hitting record highs. For investors, it highlights a major shift in the global economic landscape. We're seeing central banks around the world, not just in China, reevaluating their strategies and hedging their bets with gold. The impact goes beyond just the price of gold. It affects currency exchange rates, international trade relationships, and the balance of economic power. It's a sign that the world is becoming more multipolar, with multiple centers of economic influence instead of just one. The global financial system we've known for the past 70 years is evolving right before our eyes. China's golden strategy isn't just a headline, it's a fundamental reshaping of global finance. It's a fascinating story of strategy, power, and the timeless allure of gold. What do you think this means for the future of the global economy? Let me know your thoughts in the comments below. Thanks for watching. If you found this interesting, don't forget to like this video and subscribe for more deep dives into the forces shaping our world. See you in the next one.